Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst. In the last few days, this picture has been trending on the social media platforms. I'm talking about one of India's most complex demerger that has happened just recently, Vedanta Group. Now, is this demerger going to be a gold mine for investors or is it going to be a trap for investors? I'm going to speak about in this video in simple 4 points. Point number 1 is the price discovery of demerged companies. A lot of volatility has been seen in these companies. I'll try and clarify, give you an exact picture of what's really going on. Point number 2 is what is this demerger all about? Which businesses are moving into which listed companies, etc. Extremely important point that no media house is covering so far in the detail that I would like to cover. Point number 3 is after this demerger, which companies are likely to show strong performance because of capex, because of low debt, etc. I'm going to talk about that as well. And point number 4 is the most important one, which is the risk associated with Vedanta Group. I really need you to understand because I'm going to give you totally unbiased insights in this video. The only humble request I have for you is that if you have not yet subscribed to my channel, hit that subscribe button now because we bring a lot of content for you and your subscriptions means a lot to us. With that, let's get this video cracking. The first point is the price discovery. You need to understand this point to get your head around what is going on right now in the stock market. Okay. So pre-merger, Vedanta Limited used to be a listed company, but post-merger, there are 4 new listed companies. Okay. Number 1 is Vedanta Aluminium Metal Limited. Number 2 is Vedanta Oil and Gas Limited. Number 3 is Vedanta Power Limited. And number 4 is Vedanta Iron and Steel Limited. Okay. So now we have these 5 listed companies, including Vedanta Limited itself, because Vedanta Limited still remains a listed company. Now, which businesses has gone into each of these listed companies that I'll talk about in point number 2, but let me first speak about the pricing. Okay, so prior to this demerger, Vedanta Limited on 29th of April used to trade at around 773.6 closing price wise. Okay, now this demerger was supposed to be effective from 1st of May, but 1st of May was bank holiday. Therefore, on 30th of April, Vedanta Limited's price was adjusted and the opening price of Vedanta Limited was around 289.50, meaning that all the other businesses, be it aluminium, oil, gas, power, was separated out from a stock price point of view, and Vedanta Limited on 30th of April opened at around 289.50. Okay, so far so good. Now on 15th of June, the remaining 4 companies got listed on exchanges. Vedanta Aluminium Metal Limited got listed at 522, Vedanta Oil and Gas at 38 rupees, Vedanta Power Limited 41.8 rupees, and Vedanta Iron and Steel Limited at 20 rupees. So price discovery happened and these got listed on these respective prices. Now what happened here is what you need to understand, that pre-merger, the price of Vedanta Limited on the closing basis on 29th of April was around 773.6. But on 15th of June, when the listing happened for these companies, the total price, if you do 289.50 Vedanta Limited, Aluminium Limited 522.38, 41.8, 20. If you do the total of that, comes out to be around 910 rupees. What does this tell you? This tells you that after merger, the 4 newly listed companies and Vedanta Limited, the original company, if you put the price together, it is 910, and prior to that the price was 773.6. So on 15th of June, when the listing happened in the morning, the wealth that it created for investors who had the Vedanta Limited prior to merger was around 18% gain, okay, on the opening basis, right? This is very, very important point that you need to understand because each investor got one share of these companies. Okay, if I had, let's say, Vedanta Limited, I did not have, by the way, but if I had Vedanta Limited prior to merger, then post merger I got one stock of each of these listed companies and I retained my Vedanta Limited, right? So this gave investors around 18% of gain on the opening price of 15th of June. Now what happened post 15th of June is couple of the companies, for example Vedanta Aluminium, have been hitting lower circuits. Please understand why this is happening. There are possibly 2 explanations for this. Nobody can tell you accurately what really happened, but there are 2 possible explanations. Explanation number 1 is that because there is a 18%, around 17 to 18% gain on the listing day for stakeholders, they thought, you know what, it's a good time to book the profits. Why not? That could be one explanation. But the second explanation also you need to understand is around the background of this particular demerger. Okay, so this demerger was first announced in September 2023, and at that time Vedanta Limited used to trade at around 236. You can see on my screen, right? Since then, almost 3 years of time frame now, almost going to be 3 years in September. If you see, the stock have gone crazy. Okay, now I do not know what the reasons for this are. There could be that metals have been really doing well in the stock market, right? Aluminium have gone really costly. Zinc, silver prices have gone really costly. The news of demerger might have been taken positively by investors. I don't know what the reasons are, but you see there has been a sustained rally in the last few years for Vedanta Limited, and you know what? When that happened, possibly profit booking kicks off, and that's what might have happened. And that's why precisely right now lower circuits might have been going on. People might be thinking, you know what, the valuations are slightly higher, and all that is happening. And there is a huge volatility right now on these companies. And also please understand, from 15th June to next 10 days, these newly listed companies will be only in trade to trade segment. Meaning what? That intraday trades cannot be taken in these listed companies. If you were to invest in these, you will have to go by the delivery option, right? Now, which is a good thing for these companies because it will reduce the volatility. But as such, right now, there is a huge volatility. So hope you understand this entire price discovery point. And this price discovery may continue for a few more weeks because these are independent businesses now. And investors will now evaluate their appetite to invest in these individual companies one by one, looking at various aspects. So it might take few more weeks or maybe couple of quarters for the price discovery to settle. That's the important point you need to know, right? So this is all about the price discovery and what has been happening. But let me come to point number 2, which is more important, which is what businesses are going into which listed companies, because nobody is really explaining that very clearly to you. I'm going to explain that to you in the next 2 to 3 minutes. Very, very important segment of this video if you ever want to understand what is really going on in Vedanta Group. Continue to watch it. And so far, if you're liking this video, hit that like button. Let me know in the comments a simple thank you. It motivates me to bring such content to you at zero cost. Let's move to segment number 2 now. So what you see on my screen is before demerger, what was the structure of Vedanta Group? Allow me 30 seconds of time. So Vedanta Resources Limited is the UK based company. Okay. And this has a stake in Vedanta Limited, which is a listed company. So Vedanta Limited is a listed company in India, and Vedanta Resources Limited is not listed in India. There are talks about this getting listed in global markets. Okay. That's a different topic altogether. But this company hold around 56% in Vedanta Limited. Now let's look at Vedanta Limited because this is where the demerger has happened here. Okay, so Vedanta Limited has a lot of subsidiaries. For example, Hindustan Zinc Limited is a subsidiary that also is owned partly by government, right? I hope you know that. But primarily, if you look at these blue boxes, which are not listed companies, for example, Balco is there, okay, Zinc International is there. All of these companies were there as part of Vedanta. These were all subsidiaries, and you can see how much of stake Vedanta Limited had. For example, Zinc International, Vedanta Limited had 100% stake in this particular subsidiary, right? And also Vedanta Limited had a lot of other divisions. For example, power was a division, aluminium was a division, oil and gas was a division, etc. So this particular structure was highly complicated. As an investor, you would have tough time valuing this particular organization. Now that's precisely one of the reasons I think that demerger is very, very good for investors, because now post demerger, what has happened? You see the new chart here. Okay, again, allow me 30 seconds of time. I'll simplify this in a very, very quick manner. See, the first point is Vedanta Resources Limited still remains the UK based company. This is still not listed in India. Okay, nothing changes there. But underneath, if you see Vedanta Limited, the green one, there are multiple entities now, right? From Vedanta Limited, aluminium business has been separated out into aluminium company, power has been separated out, oil and gas has been separated out, and iron and steel has separated out. So 4 new listed companies that you can see in the orange color has come out, and Vedanta Limited, which is in the green color, still remains a listed company. Now what goes inside which business, let me give you quick commentary here because it's very, very important for you to understand that. So Vedanta Limited here, okay, let me first talk about that. First of all, Vedanta Limited still holds 60%, around 60% stake in Hindustan Zinc. We all know about Hindustan Zinc, okay? Hindustan Zinc has, for example, a lot of mines. You can see on my screen these mines. They are under Hindustan Zinc Limited. There are smelters you can see here, okay? So that remains intact. There is no change for Hindustan Zinc Limited per se. It used to be a listed company. It continues to be a listed company. Vedanta Limited still has the same stake that it used to have pre-demerger, right? So there is no change in Hindustan Zinc Limited. I'll talk about a lot of other points about Hindustan Zinc Limited in a minute. But coming back to this chart here, one is Hindustan Zinc Limited, but the second unit that remains within Vedanta Limited is Vedanta Zinc International, which is VZI. And you see the operations here in South Africa, for example, Gamsberg, Black Mountain Mine, Scorpion Plus, I'm going to get the name wrong here. In Namibia, they have some operations. So all of this is within Vedanta Zinc International, that is still part of the Vedanta Limited. Now the third business that Vedanta Limited has retained is the copper business. Okay, so they have copper businesses in terms of domestic and international, Sterlite Copper, Middle East, okay, Silvassa, Tuticorin, all of these copper mines. They're still in the copper business. They're still within the Vedanta Limited, and their international mines are also within Vedanta Limited. Then you have fourth business unit, which is FACR. What is FACR? FACR is simply ferrochrome business that the Vedanta Limited had. Okay, ferrochrome is an input material for stainless steel. Again, you can go and read about it, but this is the fourth business. Now, if you focus on Vedanta Limited, there is a lot of opportunity in Vedanta Limited still, in my view, from a business perspective. I'm not talking about the price or the valuation here. I'll come to that in a separate video sometime later on if you like this video. But as of now, if you talk about the capex that they are doing within Vedanta Limited, that is huge. You can see on my screen, I've converted all the $1 million and crores into one single currency for us to easily understand. And the total unspent capex that comes out for Vedanta Limited, including their Zinc International, other projects like mines, copper business, etc., it comes out to be around 79,000 crores of capex still to be spent within Vedanta Limited. Okay, this is a huge capex. I don't know what is the exact timeline for this to be spent. I'll come and talk about different capexes in their different organizations, but as of now, this remains a very, very solid business to me. Why? Because the company is projecting around 18% EBITDA growth rate on a CAGR basis, on an annual basis, up until FY30. This is just a projection. This is not a guaranteed profitability growth, but the company seems very, very bullish about Vedanta Limited, and they are projecting around 18% of EBITDA growth in the coming years that you can see on my screen. Primarily, it is going to be driven by Hindustan Zinc Limited. The blue boxes that you see is the growth rate coming from Hindustan Zinc Limited. Green box is the Vedanta Zinc International. Copper business is minor. It's not that huge. FACR is also very, very limited. Nickel is also very, very limited, right? So hopefully you get this entire picture that Vedanta Limited is likely to grow at around 18% CAGR basis from an EBITDA perspective. And also they are putting huge capex, which is around 79,000 crore, as you can understand, right? Now, there are other businesses that they are also getting into. For example, critical minerals. I'm leaving this for you to study because the video is going to get really, really long here, but they are also getting into critical minerals, for example, tungsten, potash, etc. You can read this particular. So overall, this is Vedanta Limited, which in my view still remains a lot of value within the business because of Hindustan Zinc Limited and because of Vedanta Zinc International Limited. Capex is huge, growth is likely to be there. I will talk about risks in a minute so that you get a totally unbiased commentary about this particular business. But coming to other listed companies like Aluminium, for example, allow me 1 minute of time, and I'm not going to go into details of what is inside power business, oil and gas, iron and steel. This video will get really, really long. We can talk about this for another 2 hours, 3 hours. That much of detail is there within this particular group. But Aluminium business, if I talk about, they are talking about doubling the EBITDA by FY29. You can see how much of growth they are expecting in the aluminum business. And if you go and read news, investors are most bullish about Vedanta's aluminum business. Okay, you can see the data here in terms of the volume is likely to go up in terms of production. Cost of production is likely to come down. EBITDA is likely to go up, as you can see here. These are all projections, by the way. Okay, and their estimate is that by FY29 they might hit $5.8 billion EBITDA. One thing that you need to understand why I'm talking about EBITDA here, because these companies do not yet have their own profit and loss entities or the statements where we can see the PAT. Okay, the profitability you can see at EBITDA level as of now, but sooner in the next few quarters we are likely to see P&L of each of these companies, and this is mind-boggling for me. Why? Because as an investor I can decide whether aluminum business is good or bad. I can decide whether the iron and steel business is good or bad, right? This is very, very important for investors' perspective. They can independently evaluate each of these businesses. But coming back to aluminum business, it's a fully integrated business model that Vedanta has, which is a very, very good point for their business, because they have the mines for aluminum ore called bauxite and also the coal, which is needed to produce the electricity, right? Alumina refinery is there, then captive plants are there, aluminum smelters are there, and then value-added products that they create out of this aluminum. So it's an entirely integrated machine that they have. If I can oversimplify that they are able to produce aluminum from beginning to end in terms of the entire value chain. Now, one of the risks with their aluminum business as of now I see is the price correction of aluminum. So what you see on my screen is how the aluminum prices have moved from 2017 in the global market. And we all know commodities are very, very cyclic. So there is a rise in the prices, then fall, then a huge rally up until 2022 post-COVID, then again calm down. And right now again the aluminum prices are on the higher side. There might be correction in the aluminum prices, and their profits, their revenues are likely to get hit if the price is correct. I'm not saying it will correct. Please understand. I'm not saying it will correct. I don't understand the commodity market in terms of how the aluminum prices will go up or come down. But that is one thing that you need to take into account in terms of the correction possibilities. So this was all about which listed company has got which businesses inside that. Hope you got that clarity. Now let me move to critical point number 3, which is which businesses out of these are stronger, which are looking relatively weaker. So what you see on my screen is first of all the capex profile of each of these businesses. The green box that you see is the aluminum business, and clearly you can see that this has got the highest capex allocated from the company. Okay. At number 2 is the orange box, which is the zinc business. By FY27 estimated, if you see, zinc business is likely to get the highest capex in FY27. Okay. But so far, if you see past track record, aluminum and zinc, these are the two businesses which have seen higher capex growth rate, right? Aluminum is Vedanta Aluminium Metal Limited. Zinc goes into Hindustan Zinc Limited, or part of this is owned by Vedanta Limited. I hope that concept is very, very clear to you, right? So from a capex growth perspective, Aluminium and Hindustan Zinc Limited remains the high growth business. And of course, oil and gas is also likely to see a higher capex. But to me, these are the two strong businesses. Now, let me quickly speak about the debt. This is the most spoken topic about Vedanta Group in such, and I'll talk about the risks in a minute. But if you look at the debt of each of these companies, here is the true picture for you. If I talk about the net debt, which is from gross debt, if you remove all the cash reserves, you get to the net debt. Okay, $5.5 billion ka total net debt is there in this particular company pre-merger. That has been distributed in each of these companies here. Vedanta Aluminium has got $3.5 billion, so highest debt. Vedanta Limited $1 billion around. Vedanta Power 0.8, Vedanta Iron and Steel 0.2, Vedanta Oil and Gas as of now 0 debt, right? Now, if you look at the net debt to EBITDA, right, this is where the fun starts. Overall pre-merger it used to be around 0.91, but post-merger if you see, highest net debt to EBITDA is in Vedanta Power, which is around 4.7 times. Okay, lowest is in Vedanta Limited, right, which is the company that I talked about earlier, which has the stake in Hindustan Zinc Limited, which is around 0.4 times. Okay, Vedanta Aluminium around 1.3x. Okay, so if you look at from net debt to EBITDA perspective, Vedanta Limited looks the most attractive as of now. But please understand, Vedanta Limited also has zinc business, their silver business, their copper business, and a lot of their EBITDA is driven by the prices. For example, silver prices, we know last 18 months have been hugely rallying, right? That's why potentially the EBITDA is very, very higher as of now. The ratios look very, very attractive. Tomorrow, if the prices drop for whatever reason, then of course these profitability metrics will take a hit. But as of now, if you ask me to summarize this, two strong businesses as of now in my view is, one of them is Vedanta Limited and second is Vedanta Aluminium. This is where these two look very, very good from a net debt to EBITDA perspective and also from a capex growth perspective. Again, I'm not saying the other businesses are bad businesses, no, but if you look at the metrics here, these two look right now more promising to me. So this is all about which business is looking stronger, which is looking less stronger. But now let me speak about the risk associated with the Vedanta Group, because I promised you I'm going to give you totally unbiased commentary. This is not a promotional video. I never do promotional videos on any stocks. Okay, please understand that very, very clearly. I'll give you totally unbiased commentary about the top 3 risks about Vedanta Group, so that you get a totally unbiased commentary. So far, if you're liking this video, request you to hit the like button. And if you like this analysis, you can consider joining my YouTube community. I post exclusive content for my YouTube members as well, and you will learn a lot there in the community as well. Simply go to my channel, hit that subscribe button, and then you will see the join button next to it. Click that button, follow the process, and be my guest. With that, let me now talk about top 3 risks with Vedanta Group. Now, let me speak about top 3 critical risks with Vedanta Group. First of all is the debt trap. And this data I've taken from Claude. Of course, there are some dramatic terminologies here. For example, promoters use listed subsidiaries as ATMs, etc. So please ignore that dramatic sentencing here. But the point is that the risk remains the debt trap here. What do I mean by that? So they have a huge debt. We know that 48,000 crore, and that has been split into multiple companies here. But the point remains that they take more loan to service this existing debt. For example, recently they raised around 5,000 crore via unsecured bonds to service or refinance the existing debt. So they're taking debt to reservice the debt, right? This is a trap. Okay. Second point, which is my personal observation, is that the company gives a lot of dividend. Now, on one hand, you have a lot of debt. Of course, you have been reducing this as a group, but you give out a lot of dividend. Could you not hold back on dividend and try to get rid of the debt, which I don't understand personally, right? Third point, for example, the promoter holding has been reducing in Vedanta Limited, right? Over the 3 years, it has gone down by around 11.7%. Generally, this is considered a red flag because promoters are reducing the stake maybe because they want to service the debt, right? Another important point that in 2020 it was talked about that they wanted to delist Vedanta Limited so that they have cash flow coming to them. They were thinking about themselves. So a lot of these problems come because of debt trap, and this is one of the clear risks that you will ask any investor. They will tell you that with Vedanta Group, debt trap is definitely a risk. Because of this debt trap, promoters sometime might be doing things that you may not like as an investor, right? Clearly a risk out there. The second risk is regulatory and legal overhang. So we all know because of the scale of Vedanta Group, it is always in the news for the good or the bad reason. For example, very recently, ED conducted searches across Vedanta Group offices in Mumbai, Delhi, etc. Right? Because there were some allegations around payments made by Indian entities to the UK parent, etc. It's a very complex group, right? There are a lot of subsidiaries here. It's very difficult for a retail investor to really understand what is going on there. And that's why I say this demerger is very good for retail investors, because they know which company they want to bet or which company they do not want to bet, right? So this is very important point. You can read other points here as well. For example, Hindustan Zinc, the government has historically opposed several of Vedanta's related party moves, right? So there are a lot of pull and push between government, this group, subsidiaries, etc., and a lot of regulatory, lot of other concerns come out. You might have heard about the controversy between Adani Group and Vedanta Group. So this group is always in the news, and of course stock prices react to those news. This is what you need to understand as a retail investor. This is a second big risk that I can talk about. Third is the commodity pricing risk. Okay, so this is a very cyclic business. As all of us understand, the commodity prices are cyclic in nature. This is where you need to really be very careful with these companies, because for example, Hindustan Zinc earns around 75% of revenue from zinc and lead. Now what happens to zinc and lead prices decide the profitability of these companies. So if you see the price movement upwards, companies are likely to do better in terms of earnings, etc. But if the price is correct, then there are likely to be pressure. So it's a very cyclic business. You really need to see at what price you are trying to buy these companies. Never buy these companies at all-time high. That is a minimum caution that you need to take. But I hope you understand all of these businesses are commodity businesses, and there is a lot of price elasticity in these businesses. Hope you understand all the three risks that I have explained. A lot of things that I could not explain in this video because video was getting really long. A lot of people will crib in the comments that can you not summarize all of this in 10 minutes? It's not possible. In 10 minutes, what you will get is the media news. You will not get the deep dive around what is really happening in this group. I've done my best to bring concise information to you in the last 25 minutes. I hope you enjoyed this. Also hit that subscribe button. Let me know in the comments a simple thank you. It motivates me to do a lot of research for you at zero cost. With that, I'm going to see you in my next video. Until then, keep rocking.